Well, markets, of course, are under pressure this morning as the war in the Middle East continues. This comes with the price of oil at one point hitting nearly $120 a barrel this morning. Joining us now to talk about it, Allan Small, Senior Investment Advisor at Allan Small Financial Group, IA Private Wealth. Allan, thanks as always for joining us.
Great to be here.
Right now, we're looking at oil. Last time I looked, I think it was at about 110. What are your thoughts on it? Where do you see it going right now? Oh, it's back down. It's back down to 100 now. It's all over the place.
Yeah, definitely. We saw some relief, I think, in the wee hours of the morning when I guess the G7 announced that they may be releasing some of the oil reserves that they've built up in each of the countries. Obviously, that is an option for the countries, for the United States that has their oil reserves that they can always tap into. We've seen them tap into these oil reserves in the past. So I think that put a bit of a calmness to the oil markets, brought down the price. We saw Brent crude and WTI at one point this morning almost trading at the same price. We know Brent usually trades a couple of dollars above WTI, West Texas Intermediate, of course. And so overall, I think, the heightened situation in the Middle East is only going to keep oil prices elevated. But I think for those that are investing in energy stocks, we saw CNQ, I think just on your show just a few minutes ago at record highs, over $60 a share. And some of the other oil names that we're seeing in the U.S. or all around the world, I think you have to be a little bit careful if you're an investor, because I think at some point oil prices will pull back. Obviously, whether it's going to take some announcements on what's going on in the Middle East, or maybe announcements from G7 countries adding more oil out there, and or announcements from OPEC or anybody like that. So I think you have to be careful with the price of oil. It is obviously a very volatile, as you said, right now. But I think over the next few weeks, I think you could see oil prices definitely decline back to lower levels.
And going back to the last time the G7 freed up some oil, what kind of an impact did that have? Was it anything long-term, or was it more just a short-term fix?
I think it's more of a short-term fix. I think it's a short-term Band-Aid solution until, whatever happens in the Middle East works its way through. I don't know where we don't know where the war is headed, where it's going. Obviously, we do know that wars don't last forever. And the effects on the markets usually are positive. We see the volatility that we're seeing, but then after the conclusion of the war, however it ends, whether there's a ceasefire, whether there are some concessions made on both sides, nobody knows. But usually a few months after the end of a war like this, you definitely see markets rise. You will see oil pull back, and you will see the markets regain some traction once again. Volatility will be out of the market. So I think what the G7 nations, if they are going to put more oil into the marketplace to help bring down the price of oil, I think it is a short-term phenomenon. Obviously, they cannot maintain putting more and more oil out of their reserves for too long. But the hope is that they can do that for long enough until there's some resolution out of the Middle East.
All right. Crises can be an opportunity. Where are you looking right now?
Yeah, it's interesting. I think even today you're seeing that, for example, the NASDAQ not down nearly as much as you probably may have thought. The Dow has been taking it a lot harder. The TSX is kind of mixed, obviously, because of the oil is higher. Gold has been higher, or maybe even a little bit flat to slightly higher. But I think it's the NASDAQ that I'm looking for opportunity right now. The big cap tech names. You take a look at a name like Microsoft and Meta and names like that. I think they're extremely cheap. I think they were cheap before the conflict in the Middle East broke out. And I think they're still cheap till this day. And I think these are the names that have the ability to actually continue to move higher even at this time. We saw software stocks last week actually improve, do a lot better. ServiceNow, Salesforce had actually good weeks last week, even during the Middle East conflict. So that's where I'm looking right now. I think the tech names were sold off prior to the war breaking out. And I think those names were cheap prior to the war breaking out. And I definitely still think they're cheap today. And I think investors can actually, hide out in some of these big cap tech names, because I don't think they're as affected by what's going on in the Middle East as much as other sectors.
Now, any concern about some of the Middle East investors pulling out of any of those groups?
I think there's always a concern, but in my opinion, I think that over time, I think that these are the areas of the market where we see the Saudis investing and the UAEs of the world. More and more money is going into data center, AI, et cetera. So I don't anticipate any of the foreign countries or countries around the world pulling their money out. I think they're going to be looking for a place to put their money and to invest even during these times and in the future. And I think that is only a positive for these big cap tech names.
All right. What are you shying away from right now?
Well, obviously, a lot of people are shying away from areas like, airline stocks, hospitality sector. The banks have been really hit hard, although I'm starting to look at banks once again. You're looking at banks, for example, in the United States, really pulling back. A name like JP Morgan down quite a bit from the highs. Bank of America, some of these big money center banks in the U.S. are pulling back, and they could represent good buying opportunity once again. Once we can get past through what's going on in the Middle East, obviously banks are the bloodline of any economy. If there is a slowdown due to what's going on, higher oil prices, bringing down growth, higher costs, bringing down growth, that will affect the banks. And again, keep in mind, the markets are the best barometer looking forward, right? They're a forward-looking mechanism. They're telling you that they're nervous of what's going to happen to the economy if this war should carry on for another month or so. What's going to happen to economies around the world. And that's what the market is telling you. And that's what bank stocks are indicating by pulling back. So I think could be a buying opportunity at some point down the road. But right now, I'd probably be shying away from those areas.
Okay, we've got to wrap it up there. But Allan, thanks as always for joining us.
Thank you.
Allan Small, Senior Investment Advisor at Allan Small Financial Group, IA Private Wealth.